yeah. Good evening. My name is Anna May. I will be pitching FTNT as a buy. So to kind of go over what I'm going to talk about today, I will go over first my investment thesis, then kind of do an industry overview, kind of paint the landscape of what's been happening this past year specifically, go over the company, the competitive advantage that I see that they have, their valuation, and then ultimately the Q&A. So this is very much a growth story. It's very much an organic growth story. It's relatively straightforward. I'll be hitting on key points that I think are important, especially within management. I think that they're an industry leader within their subsector, within cybersecurity, and they also have a very strong management team in place that I think positions them to continue growing and capture that growth within the industry. So these are our current holdings within the tech sector. We have, we're currently at 16.9% compared to the S&P weighting of 19.2%. In the middle, that green and red, the green is our ETF and the red is the S&P. Yeah, just by looking at some of our larger companies, IBM, Microsoft, are underperforming, just to keep in mind, I guess. So this year has been a really big year in terms of what's been happening in cybersecurity. It's been all over the news. This graphic is from Hahnemann Institute. They kind of put together, this is the number of data that was taken from these hacks. That was this year. And then the numbers on the side is the average that is spent for overcoming these cyber hacks. So companies on average are getting attacked 77 times per year. So this is a very real threat that's increasing as technology is advancing and more customer information is getting stored virtually with these companies. These were just the financials, technology, and communications were just some of the largest sectors that have had these hacks. So in terms of 2014, the three largest cases were Target, JP Morgan, and Home Depot. So for Target, that cost them $148 million, $200 million for banks because the banks had to repay all of the clients or customers that lost their credit cards or debit cards. They had to reissue those. Any fraudulent charges, they had to repay that. And Target had already been spending, this was after this breach, they decided to increase their spending by $61 million on this anti-breach or cybersecurity technology. JP Morgan also had a hack. Fortunately for them, it was more for marketing purposes, and I don't think as much consumer information was able to be taken, but they currently are already spending about $250 million on cybersecurity, so that was kind of confusing and a little bit surprising to them because they already have this massive budget. And then Home Depot costs similarly over $90 million for banks for similar reasons. And then their reasoning for this break-in was because they had older software in place and they had very high turnover within their technology, their tech employees that worked for Home Depot. So overall, it seems that financial institutions are actually bearing the brunt of a lot of these break-ins or breaches, rather, even if the company that's targeted isn't a financial institution, just because they're the ones that ultimately have to repay those fraudulent costs. So the cybersecurity industry as a whole, its market value is projected to be $65.5 billion by 2015 to 2020, although that's pretty conservative. I've seen other estimates that go up to $155 billion by 2019. So there's a lot of speculation about the amount of growth that this industry is going to see. Currently, they say it's about 7 to 8% of a growth rate. The global spending is increased from 2013. The Obama administration is increasing guidelines, not necessarily hard regulations, but guidelines for companies that they want to see implemented for increased cybersecurity. I think just last week he was speaking at Stanford about the cybersecurity conference, and FTNT's CEO was there as well. So it's very rapid, it's highly competitive. Some of the biggest competitive factors are product performance, the tech support that you have, the price of these products for the consumers, which is typically businesses, the compliance that these security features have, the breadth of the products that they have, and then also the sales and distribution capabilities. So very similar to other business streams. So Fortinet, this is the same graph as before. If we add Fortinet, it went public in 2009, so it's still a relatively new company. They went public at $12.50 a share. So because they're so new, you can see a lot of volatility and fluctuation. That is to be expected. It was similar across their competitors as well. They are relatively small compared to the competitors. They have about a $5.5 billion market cap. Their 52-week high was actually on Friday at $33.97. Today they closed at $33.32. And their low was almost a year ago in April at $20. So, I touched on management before. Management is definitely, I think, an essential part or portion of the story because they're the ones that are ultimately guiding how much spending, which, if you saw my model, there's a lot that they're putting in sales and marketing and also research and development. So their board is comprised of 7 members, the 2 co-founders, Ken Xie and Michael Xie. I'm not sure if they're related or not. One's the CEO, one's the CTO, Chief Tech Officer. There's also Ming Xie, who used to be the CEO of a pharmaceutical company, Hong Liang, who's the CEO of a software company and is also on the board of another tech company called UStarCom, or UT-Starcom. William Newcomb, who actually used to be the chief exec VP of Microsoft's legal side, so he has a law background. He works at a firm or owns a firm in Seattle, I believe. And then Christopher Palsy, he's the Dean's Executive Professor of Finance and Accounting at the Levy School of Business at Santa Clara University. So they have a very diverse board with a lot of expertise and a lot of industry knowledge from very different perspectives, which I think is definitely an edge that they have over their competitors. Their main focus on strategy is to constantly invest in technological change and to keep on top of trends, because that's ultimately the name of the game in technology. They want to keep their existing customers and also reach out to new customers. They are focused on cross-selling, so their products kind of reach one customer can use a lot of different types of their products and see how they all work together. They also want to strengthen their sales. So this graph behind me is, they found that for every dollar that their customers spent in the first year, over the next 5 years on average, they will spend an increased $5. So through this kind of is also a bit of a breakdown of their different products, which I'll go into in just a second, and just how they all kind of play together. So they gear towards, they kind of sell their products in like a tiered system, which makes it just easier to break down for the different types of clients. The high enterprise, which is usually larger businesses, and then it goes into smaller businesses. And their ultimate goal is to just hope that their existing clients, which might originally be smaller clients, turn into larger clients and increase their the types of products that they're using from Fortinet. So what I mean by all of that is that their niche in cybersecurity is Unified Threat Management, or UTM. So basically what this does is they have security on all levels, instead of, oh, that's changed on mine and not on yours. Okay. So typically, you can hire a bunch of different companies to focus on different parts of security for your company. So you have one company for firewall, one company for your cloud, one company for, I don't know, like internet security. What Fortinet does, well, they do a complete, they'll cover all of it. So starting from everything to accessing your web email from your phone to being inside the company and working within databases, that's all completely covered by Fortinet. So it's very easy for enterprises because then they just have to work with, they first of all just have to deal with one company instead of 7. And then if something goes wrong, they know how to pinpoint it, and it's easier for the customer. So this was, as I alluded to earlier, the breakdown of their products. They're pretty well diversified in how they break down their products. There's the high level, the mid-level, and the entry level. So entry level is typically just emails. I think they host some URLs, servers. pretty general, and then it increases to full-on like cloud, VPN, firewall, and there was a lot of tech words that I didn't get. More or less, this is how they're diversified, and they've also seen a lot of growth within each of these sectors as well. And then geographically, they're also pretty well diversified globally. I think a lot of this has to do because their management is also Asian in descent, so I think it's easier for them to communicate across borders within Taiwan and China especially. So that's really been, I think, an aid in them being able to capture those clients that are in different countries. So they've also seen, so they are in the Americas, which is North America, where about 40%, I think, of their revenues come from the United States. And then they recently captured contracts with a Middle Eastern telecom company and I think a large bank in Europe as well. So they've also seen a lot of revenue growth within these different geographies. This is just from these last quarter four of 13 and 14, respectively. So some of their edge also lies in patents. This is an industry that does have a lot of patents. As of December 2013, Fortinet had 130 patents within the US, 21 patents within China, 4 within Taiwan, and 1 in Japan. They're all supposed to expire within 2019 and 2031. So long term, they're still fine for it. Recently, they received $5 million cash from a lawsuit that they won from one of their competitors because of this sort of patent infringement. Currently, they have 105 patents pending application. So a lot of their research and development costs are going into this patents. They also have the most certifications within the industry, which is something that management realized that they needed to do because as this industry is becoming more mainstream and people are thinking about cybersecurity a lot more seriously, they don't know which company to use. So they realized that by having these certifications, it's kind of like their FDA approval of saying that my security services are going to be secure and you're going to get what you paid for. So they have 13 of these certifications, and most recently they got one from the US Department of Defense, which is that logo. That was pretty cool because the Department of Defense ran them through a very stringent guidelines. And then their contract structure, which is related to their products and who their clients are as well. They primarily sell to distributors, which will sell then to their ultimate end users. So this is good for them because they're a smaller company and not very many people know about them. These distributors will be able to put them in contact with those governments, the government entities that they can sell their software to or their products to, and also those larger enterprises that they might not otherwise have an entryway into. They have both a physical and a virtual subscription, so the physical things are things that you physically can install within that company in terms of the VPN, I don't know what these words are, but like a physical, what's it called? But, server? Yeah, server, there we go. Oh my gosh, thank you. So like a physical server that has all of their safety features within it, but then also virtually through services. So those are usually payable within 30 to 90 days in terms of their accounts receivable. And then their service revenues are typically about a year, but can be expanded into 5 years. So that's where they see that $1 now, $5 over 5 years growth from those service fees, and then also subscription contracts. So some of their top competitors, these were competitors that they had listed within their 10Ks and that management had specifically pointed out for competitors that they had recently won contracts against. Fortinet is highlighted up there. You can see they have a very high PE ratio, which means this is relatively recent. I think it was only after they only had this high of a PE ratio after their quarter 4 earnings came out. So I think the market has kind of responded and realized that they are positioned to be very high growth, because before there was a lot of uncertainty, as you can see also from their stock price. There was a lot of uncertainty with the company. And then something else I wanted. Yeah, so they've just been consistently winning deals against some of their top competitors, which have larger market caps, which just shows that Fortinet is positioned to be able to have that competitive price point against some of these larger companies, such as Firewall or Cisco even. And these are just some other ratios that were more geared towards their sales side, so R&D over sales, CapEx over sales. They're more or less in line with the average. And then these are recent highlights from their Q4 earnings. They saw billing and revenue increases by a lot over their the industry. If you remember, that was 7 to 8%, so you've been seeing like 35% upwards of that. But then I can see you're probably all thinking about the net income, which is showing a negative, and I will also talk about that now. Why the lower net income? So because management realized that by investing a lot in marketing and sales, they were able to reach new markets and to be able to expand their brand, because they're relatively small and still relatively new. And so they saw that this paid off a lot by their increase in the number of contracts and in the quantity and the value of contracts that they got this year. So they felt that this was something that they wanted to continue, that marketing and sales costs. They've also increased the number of people that they've hired very recently. In the words of management, they've said that they've literally had people knocking on the door to try and work for them, just because people see this as an opportunity. So they've recently hired a lot of leaders within different industries, which has been able to put them in touch with potential future clients. Some of these, I believe they said, was pharmacy and within the healthcare sector. So potentially this coming year we'll see more contracts with this sector as well. So then with a growth story that's this strong, there's a lot of investment risks, as well as why hasn't everyone picked up on this. So a lot of it is what I think is strong, which is management, could also be a downfall if management provides improper guidance, or they are wrong in what they're doing their research and development in. If they're wrong in how their sales and marketing goes, that will have a very detrimental impact on their bottom line. Technology is definitely a major risk. If there's new technology that comes out, there's a competitor that suddenly comes out that is offering the same product at a lower cost. If the technology develops too quickly, if one of their products is involved in a breach, these are all things that they have to consider. The competition is very fierce. And also for their manufacturing contracts, they do not produce their products in-house, they manufacture them out, so I can see that as a risk. And then for my valuation, this is the yellow, the highlight. So I changed a bit. I think I sent it out to you guys. I did the no-plat type evaluation and did it kind of in two ways. I brought it out to the industry average of about 7%, but then also to the GDP growth of about 4%. I had issues with both of them, so I'll go over those. So first, when I did the Gordon growth, I brought it up 15 years and didn't think that the industry might not reach like a perpetuity in 15 years. But by doing that and making this assumption, I had a value of $46. And then by doing an exit multiple using its comps of the EV over EBITDA multiple, because they had a very, very high multiple, I used a comp one. They were priced at $41. And by doing this, I cut off their growth rate at the industry growth rate of 7%. So my price target is between $41 to $46. They're currently trading at 33. And ultimately, I think this is a really good addition to the SMIF portfolio. It's a niche market that is poised to have a lot of growth, especially with the current landscape. And I believe they're positioned to capture that as well. So with that, I will take any questions. Yes, someone.
So I was wondering how the company is planning on capturing that 5-time increase in revenue per customer, given that